Welcome to the Philadelphia Fed's Manufacturing Business Outlook Survey podcast. Today we will learn what manufacturers had to say about business activity for the month of December. I'm Danielle Mazzone, Media Relations Representative at the Federal Reserve Bank of Philadelphia, and I am joined by Senior Economic Analyst Mike Trebbing. Mike will start our conversation with a quick overview of this month's survey.
Thanks, Danielle. Our regional manufacturing survey's broad diffusion indexes were all positive again this month, although most indicators fell from their extraordinary high readings in November. The current general activity index fell back 16 points, but remains higher than the readings in September and October. Most broad indicators, therefore, continue to suggest expansion of the manufacturing sector in our region. The survey's price indexes suggest moderating price pressures. Firms' expectations for the next 6 months remain overall optimistic, although the broad future indicators decline modestly. Our supplemental questions this month, we ask firms about their expectations for changes in various input and labor costs for the coming year. As in past years, firms forecast the highest percent cost increases for medical benefits and indicated that the increase would be greater than the increase in 2014.
So, Mike, can you provide a summary of the nature of the decline? How are you interpreting this big reduction?
Right. We had a very large increase in the general activity index in November, as everyone is aware, and the numbers bounced back more or less to where they were in the previous 2 months. I think that the index is higher than it was in September and October, as I said in the statement, and the same pattern was seen in most of the other broad indicators of new orders and shipments. So I think overall it's still a good reading in terms of signaling expansion in the manufacturing sector. It's just that November was stronger than we would have expected. But on the other hand, we did see even strong numbers in the national numbers for the Industrial Production Index, for example, in November. So we were consistent with that reading. And as you might point out, might remember from last month, we had quite a few firms saying that the growth was better than it normally is this time of year. So I wouldn't interpret the decline as bad news, because we still have readings that are positive, and the forecasts of continued growth are still holding up very well.
Great. So with respect to the special questions, what do you see as the main takeaways?
Yeah, as I mentioned, we've asked the same question in December the last few years, so we have some comparisons. We asked for actual numbers this time, the firm's expectations for cost increases or decreases for 2015 compared to 2014. And then we also asked for the various categories of expense, whether these expected costs were, how did they compare with the costs in 2014. And like we found in last year's survey, healthcare benefits continue to be the highest expected increase. We calculated the average response being a little over 8%, about where it was last year. Wage growth around 2.5%. And of course, we asked about raw materials and intermediate goods as well. Those were much smaller percentages. We did ask for their expectations of energy increases, and overall, the firms indicated a modest decline from what they were expecting for their 2014 costs. Of course, we've seen the extraordinary decline in energy prices even in the last month. So I think they're less certain probably about those cost changes going forward than the other categories. And then then looking at what they said about how they expected how these expected growth rates compared to 2014, focusing in on the healthcare benefits. 67% of the firms indicated that rate of growth that they indicated was higher than what they were experiencing this year. So in many ways, it's not much of a different story than last year. Still fairly modest growth in wages, although a little over half the firms did indicate that their wage costs would be going up compared to 2015, but the average growth rate that we calculated was still a modest increase, about 2.5%.
Okay, great. The next Manufacturing Business Outlook Survey will be released on January 15th, 2015. On January 8th, there will be historical revisions available on our website.